On Thursday, oil prices pulled back from recent highs but were still holding near $89 per barrel. The current price changes are minor and growth potential seems limited at the moment. The asset has been in high demand for over 5 weeks. Ongoing speculative interest and the risk of crude shortages have been supporting the rally. Market participants have been monitoring the situation in Europe and the Middle East. At the moment, worries about a possible energy deficit have calmed down. Besides, the OPEC Plus has a meeting scheduled for next week. The cartel is unlikely to take any drastic measures. The OPEC Plus members will most probably stick to the previous plan of a gradual production increase. Under current circumstances, this can lead to a further rise in crude prices. In general, there is no indication of a new rally, and oil may enter a flat channel in the near term. Here is a technical overview for the short term. On Thursday, Brent futures pulled back from the resistance level of $90 per barrel. In this case, a correction towards the mark of 80 would be quite logical. Yet, given the current state of the market, oil is more likely to enter a sideways channel formed alongside the local high of the trend. The overall outlook remains the same. Growth potential is supported by high speculative activity. Thursday's session was favorable for the ruble. In the course of a correction, the Russian currency managed to regain ground. Given the high overbought status of the pair, this was a very natural scenario. In addition, a positive fundamental background supported the ruble. Thus, political tensions between Russia and Ukraine have notably eased. Markets were optimistic about the fact that the two sides continued diplomatic negotiations. Amid this news, the ruble got a chance to recover from pressure. Now investors are waiting for an official response from Moscow regarding security guarantees with the US. If Russia's response is negative, the US dollar is likely to return to 79 against the ruble. However, if the dialogue continues, the pair may reach the level of 77 rubles per dollar by the end of the day. What's more, the Russian currency gains additional support from the crude market, as well as from the recovery of global stock markets after the Fed meeting. As for the technical picture, the dollar versus ruble pair faced a correction on Thursday as a result of its overbought status. The dollar depreciated by about 2.9%. This is a typical market reaction after a long rally. Today, the corrective movement is still in place. According to Fibonacci levels, the quote has reached the level of 23.6, which coincides with 77.70 rubles per dollar. To extend the correction towards the next Fibonacci level of 38.2, located at 76 rubles per dollar, the price needs to settle below the level of 77.20 on the 4-hour chart. Otherwise, the correction will turn into a flat movement, which is a good factor for buyers. In the meantime, gold is extending its rapid decline caused by the recent meeting of the US Federal Reserve. In 2 sessions, the asset depreciated by almost $60. Such a rapid drop confirms that speculative activity around gold is high. In these conditions, the future of the precious metal remains cloudy. Major global central banks, with the exception of the ECB, embarked on the path of raising interest rates and reducing stimulus measures at a higher pace. This is one of the reasons that put pressure on gold prices. If the European Central Bank joins its colleagues and tightens monetary policy, gold may well drop to $1,700 per troy ounce. As for the technical picture, gold futures lost more than 3% in the course of the 2-day fall. Following the downward momentum, the quote overcame the local support level at $1,800 per ounce. Currently, the precious metal is largely oversold, which may lead to a slowdown in the pace of decline and a flat movement near the area of $1,800 per troy ounce. This is how this volatile week may end according to our analysts. We hope that our video review will help you develop a successful trading strategy, and we wish you successful trading on Friday and see you back soon.